So the stock I want to talk about today is Shopify. And I know a lot of you have heard of this stock before, but some of you might not know anything about Shopify. So I wanted to fill you in on some important updates from their Q2 earnings report. And then I wanted to also talk about why this is a stock that I believe is a millionaire maker stock. Now, if you are a new investor or you enjoy investing strategy videos, I think this is a video that you will get a lot of value from. So do your best to hang in there and not get too bored with me. Or you can click on this video of a cute cat. Ah, look, it's so cute, isn't it? No, don't do it. So I guess first, in order to be fully transparent with you guys, I will disclose how much Shopify stock I own and what my cost basis is. Currently, I have 153 shares of Shopify stock, and Shopify on the day I made this video was trading at $1,053.59 a share, which if you are good at math means that the current value of Shopify in my portfolio is $161,000, which is a lot of money, guys. And honestly, Shopify has been a life-changing stock for me over the past couple of years. And that is because my cost basis in Shopify stock is only $23,500. So again, if you're really good at math, that means I have returned 685% over the past 3 years. And keep in mind, guys, that this is 100% passive income. I did absolutely nothing except spend 5 minutes buying the stock. Well, I guess I have spent a lot of time researching Shopify stock, but my point is that I achieved these returns by doing nothing on a daily basis. I haven't had to spend hours a day analyzing chart patterns, worrying about entry points and exit points, or anything remotely close to what you see these traders doing on YouTube. Now, I guess if you had nothing else better to do with your time, you could sit at home and watch stock tickers go up and down all day, but you don't need to do that to make money in the stock market. In fact, I now use M1 Finance as my main broker, and M1 Finance will literally do everything for you. You can set up reoccurring transfers from your checking account into your investments, and M1 Finance will automatically purchase the correct amount of shares for each stock based on the percentages you've set. For me, I have $500 every Monday that is automatically transferred out of my checking account and gets invested into the stocks I own. And currently 40% of that weekly money is going into Shopify stock, while the other 60% gets split up between the other 40 stocks I own. So if you guys want to see my portfolio, I can definitely do a video on that. But really, M1 Finance is so easy and saves me so much time that I have completely switched over to using it instead of Robinhood. So if you are new to investing, I highly recommend you use M1 Finance and set it up to automate everything. Also, there's a link below in the description, and you can get $10 cash money for clicking that link, signing up, and funding your first M1 Finance account. In full disclosure, guys, I also get $10 if you use that link to sign up for M1 Finance, but it is my main broker I personally use, and I think it is one of the best ones out there, so do yourself a favor and go ahead and go sign up. So why am I continuing to be bullish on Shopify? Well, there were a number of positive developments that Shopify announced in their second quarter financial results, and the biggest news, and the one that is catching all the headlines from that report, is that Shopify was able to grow their revenue by 97% compared to Q1 of 2020. And the other big news is that GMV, or the gross merchandise value, grew by 119% year over year. So that is very strong revenue growth compared to revenue growth for other stocks that I have in my portfolio, and it is a signal that Shopify provides a very good service to its consumers. Now, one of the things that has been driving this revenue growth is the sickness going on around the world right now. People are not shopping in brick and mortar stores as much, and in a lot of places, brick and mortar stores have been shut down completely. This has led to people using the internet to buy more and more things, and has been a big catalyst for other e-commerce sites such as Amazon. But here's the thing you need to understand about Shopify stock. Shopify might be the only company right now that is capable of taking market share away from Amazon in the e-commerce space. And I know it sounds crazy because Amazon is a $1.5 trillion company and Shopify is only a $100 billion company. But let me explain why I think this is the case. To fully understand what is going on here, we need to start at the very beginning. The first retail stores were opened in Greece around 800 BC. No, I'm just kidding. We don't need to go that far back. I'm not doing a PBS history show here. But I do want to go back to the 1700s and 1800s because most of the shops during this time were what we like to call mom and pop stores, which basically means they were small stores that were family owned. These stores were also called general stores and sold all sorts of items to people in their community. Then around the mid-1800s, we saw department stores like Sears, Macy's, and JCPenney's catch on, which catered to more affluent shoppers, but were still similar to mom and pop stores in many ways. Now what's interesting here is a lot of these department stores are struggling right now, and a lot of them have filed for bankruptcy, including Sears, which Sears was founded in 1886, and Macy's was actually founded even earlier in 1858. So the fact that these stores are still around today is quite impressive. Okay, the next evolution of retail stores that were developed are known as the big box retailers. These are your Walmarts, Targets, and Kmarts, just to name a few. And these big box retailers are what effectively killed off mom and pop stores around the US. That's because these retailers such as Walmart focused heavily on giving customers the absolute lowest prices. And they also had everything you could possibly need all in one location. And because of their low prices and convenience, these big box retailers grew tremendously from 1960 through the 1990s. But then something happened that completely flipped retail upside down. And that, of course, was the internet. Now, I know I am taking a long time to explain my point here, but when it comes to Shopify, you need to understand the full history of retail to fully appreciate the opportunity in Shopify stock. With the internet came many sites that let you sell things online. Two early e-commerce companies were eBay and Amazon, which both launched in 1995. And we will look at Shopify's business strategy here in a second, but you can see that business strategy matters a lot when it comes to e-commerce. For example, even though eBay and Amazon both launched at the same time, Amazon has done far better than eBay in terms of growth. Despite starting out as an online bookseller, Amazon has expanded over the years and is now the largest e-commerce retailer in the world, with over $280 billion worth of revenue last year alone. But innovation never stops, and the internet is also still evolving. And in the same way Amazon disrupted Walmart, I believe Shopify will disrupt Amazon. And this is because of two big reasons. One, Amazon is not friendly to brands and doesn't allow businesses to build brand awareness. And this is actually something Shopify does very well. Shopify does its best to be anonymous, which means that when you visit a business's website that uses Shopify, you don't know that it is being run by Shopify. And there are thousands of different themes you can choose from, and Shopify lets you show only your branding. So even small businesses can have the same look and user experience for their customers as nationally recognized name brand products. The other benefit of Shopify is that there is no competition. Once you get people to your site, there are no other product recommendations being shown or confusion from third-party sellers selling fake counterfeits, which is a huge problem for Amazon. If I go on Amazon to buy Nike shoes, for example, how do I know the shoes are legit? Also, how do I know I am actually buying them from Nike and not some third-party seller? This is a big problem for Amazon because they really have no way to effectively prevent counterfeit products from being sold on their website. And with roughly 50% of sales on Amazon.com coming from third-party sellers, this will continue to be a problem for Amazon. In fact, Nike partnered with Amazon in 2017 in an attempt to eliminate the sales of counterfeit Nike products on the site, but they couldn't. And just last year, Nike announced that they were leaving Amazon to focus on getting more customers to go directly to Nike.com to buy their products. So this is a perfect example of how brands don't benefit from selling on Amazon. And really, I think this is the future of online retail. If people want Nike shoes, then they can simply go to Nike.com and skip Amazon altogether. Now, to combat this problem, you would think that Amazon is doing everything in their power to cozy up to brands, but you would be wrong. Instead of relying on brands to add legitimacy to the site, Amazon is instead creating their own brand. Amazon is currently creating their own products under the Amazon Basics brand. And you've probably seen these items pop up as recommended items while shopping on Amazon. And they are slowly expanding their product line. They have everything from batteries to towels to pots and pans and all sorts of things that they manufacture and sell themselves. And this is very similar to what Walmart does with their Great Value brand. And really, I see Amazon continuing to move in this direction going into the future. future. I think they will focus their energy on building out their Amazon Basic product line, which will give them many benefits. They get to keep 100% of the profits since it's their product. They can take advantage of economies of scale to get lower manufacturing prices, and they have more control over inventory and shipping times, which will lead to higher customer satisfaction. So long term, I think that Amazon is going to keep moving in this direction. However, this means that Amazon will not be the ideal solution for small businesses that want to stand out and build their own customer base. And this is where the value of Shopify comes in. Now, one of the biggest advantages of Shopify is also one of their biggest problems. It's great that Shopify operates in the background and lets brands shine through, but it also means you can't go to Shopify.com to buy something, because there are no stores on Shopify.com. Contrast that with Walmart and Amazon, which have what we call marketplaces. And a marketplace is nothing more than a place people go to buy and sell items. And this place can be either a physical location or, in Amazon's case, their website, Amazon.com. Marketplaces are extremely convenient because they are a one-stop shop for many different items you may need. In fact, according to multiple studies, over half of people buying something on the internet go directly to Amazon to search for that product, as opposed to simply typing it into a search engine like Google. So this is a big problem for Shopify businesses in terms of getting traffic to their store websites. But there is something that is starting to level the playing field that could give Shopify a big advantage over Amazon, and that is social media and streaming. Social media and streaming are game changers because it makes people spend more time online. And the more time people spend online, the more ads they will see. Also, it's kind of scary, but with all the data these sites collect from you, they can target very specific ads directly to you. So let's say you are looking to buy some new shoes. Well, as soon as you Google shoes or click on an ad for shoes, Google knows you are wanting to buy new shoes. This gives a shoe company like Allbirds the opportunity to target you with an ad. The benefit of this is that if you click on an ad from Allbirds, for example, and do end up purchasing shoes from them, and you also like the product, I should add that, you have to have a good experience from them, you will now in the future go directly to Allbirds' website when you need to buy new shoes. And you won't go to Amazon.com. So Shopify is doing what Amazon can't do, and that is allow customers to shop by brand. Or in other words, create a marketplace where brands can stand out. Now, one of the ways that Shopify is making this happen is through their Shop app, which was released earlier this year. The Shop app allows you to add Shopify stores to your app, pay for multiple purchase all at once, and track your shipments. And this is really like a virtual mall all on your phone. When you go to the mall, there are individual stores that you can buy goods from, and they are oftentimes recognizable brands. So you might have your separate stores such as Hot Topic, Foot Locker, and JCPenney's, but they are all under one roof. Contrast that to the experience of shopping in a Walmart. All the products from all of the different brands are spread out throughout the entire store. And you don't really care about the brands since price is the main deciding factor. So moving forward, Walmart and Amazon will continue to dominate when it comes to commodity items such as trash bags or paper towels or ketchup. But Shopify has and will start beating Walmart and Amazon when it comes to higher priced items, such as apparel, furniture, art, and really anything where brand is the main deciding factor. And again, the Shop app will let you save the stores of all your favorite brands in one convenient location on your phone. And in case you are not convinced up to this point that Shopify is a good investment, all you need to do is look at Amazon's failed attempts to compete with Shopify when Shopify was just getting started. Amazon created Amazon Web Store in 2010, but promptly shut it down in 2015. Amazon's web stores allowed small businesses to sell directly to consumers using Amazon's platform. But the problem was that it wasn't customizable enough. So when customers came to your store's page, it still looked too much like Amazon. So it really didn't give businesses any advantage over third-party sellers who were selling similar items directly on Amazon. Therefore, Amazon web stores failed while Shopify has continued to grow. And honestly, I think Shopify is much better for businesses just overall. Instead of listing items on Amazon's marketplace where you have to play by Amazon's rules and you're constantly bombarded by competition and you have to give all your sales data to Amazon that they'll probably use against you, you can create your own web store using Shopify where you have none of these problems. And because Shopify gives you similar tools that Amazon does, does, like customer-friendly payment and shipping solutions, it allows your customers to have the same exceptional online shopping experience that they would get on Amazon. So now that we understand a little bit of the history of retail and how Shopify is uniquely positioned, let's go back to Shopify's Q2 earnings report and look at some highlights to see how Shopify is addressing some of the problems we just discussed. We can see here that Shopify is working with Facebook to create a Facebook Shops channel. This will allow Shopify merchants to customize their storefronts within Facebook and Instagram through Facebook Shops while also managing their products, inventory, and fulfillment through Shopify. So this is big, and it's like I mentioned earlier, social media helps level the playing field for small businesses and helps them compete against big online marketplaces like Amazon. So I think this is a good move for Shopify, and it will help their merchants gain more exposure and grow their sales. The other news in the earnings report that I found interesting was that Shopify announced a partnership with Walmart. And this is very interesting to me because for years, Walmart has tried to compete with Amazon and has not done a very good job. But now qualifying merchants can connect their Shopify store to their Walmart seller account and create product listings on Walmart.com. So this, I think, is a win-win. It helps Shopify merchants take advantage of Walmart's marketplace, and it helps Walmart gain some credibility and beef up their online presence. Now, there are a lot of other highlights on this earnings report, but there is not enough time to cover all of them in this video. So I will link the report below in the description, and I highly encourage you to go and read it. So guys, I know this video is long, but the advice I'm about to give you now is the most important part of this entire video. And by the way, this advice could allow you to become a millionaire with a very small amount of money. So you definitely want to listen to this part. The crazy part for me, since I've been using this strategy, is that if Shopify reaches $6,532 a share, I will have turned my $23,500 initial investment in Shopify into $1 million, which is crazy. But that is the power of investing. And so my advice to you is focus your energy and money on stocks that benefit from mega growth trends. In Shopify's case, it is e-commerce. And we can really appreciate the opportunity in e-commerce by looking at this chart of US e-commerce sales versus total retail sales. We can see here that e-commerce sales grew from $461 billion in 2017 all the way up to $602 billion by 2019. But not only are e-commerce sales growing every year, they are also making up a bigger percentage of the pie. Also keep in mind that total retail sales are also growing every year as well. So this is a multi-trillion-dollar opportunity for companies that compete in this e-commerce market segment. Now the next thing you want to do once you've identified an area of mega growth is to try and find the few companies that are doing it the best. And one of the easiest ways to do this is to look at revenue growth. Great products and services will lead to high revenue growth rates. But revenue growth is not the only way to tell if a company has great products. For me, my decision to invest in Shopify when the stock was trading under $80 a share was driven by the fact that Amazon Web Stores was not successful in, basically killing off Shopify. If you remember what I said earlier, Amazon did try to compete with Shopify before Shopify was even a publicly traded company, and they couldn't. Shopify ended up winning. And when Amazon, the pioneer, the 800-pound gorilla in the world of e-commerce, creates a product aimed at small businesses, and those small businesses say, we would rather use Shopify, I knew that meant Shopify wasn't going anywhere. Now, this next part is almost more important than the previous step. Once you identify a stock like Shopify that has a fantastic product in a multi-trillion-dollar market segment, and you have bought shares, you need to ignore the haters and keep dollar cost averaging in. There were so many opportunities early on for me to sell my Shopify stock. In fact, the hardest one for me was when Andrew left, a notorious short seller, called Shopify a scam and predicted that the stock would drop from $135 a share all the way down to $60 a share. And as you can imagine, a lot of media outlets picked up on this story, and the headlines for a couple of weeks were very much doom and gloom for Shopify. And the stock actually did drop 14% in one day alone based on that report. But I read the report in detail and I came to the conclusion that he was wrong and I was right. So I didn't sell and I kept buying more Shopify stock. And from that point, in about late 2017, Shopify shares have kept going up and are almost up 700% since he released his report. all those years ago. Now, some things to keep in mind with this strategy. 1, not every company is capable of becoming the next Amazon or Apple or Microsoft. So these opportunities will be rare and you won't find them every day. Also, the earlier you try to get in on a company like Shopify, the more volatility and criticism you will have to withstand. Shopify, at a $100 billion market cap, is seen as a much more reputable company than it was when it only had a market cap of $10 billion. So basically, the smaller the stock, the bigger the risk you take in potentially being wrong. So make sure you are at least aware of the size of the company before you invest large sums of money into the stock. The other thing that I want you to realize is that it is not good to think of stocks as missed opportunities. And it is also not good to get fixated on the price of a stock. Stocks of good companies keep going up for long periods of time. For example, if I believe Shopify is a $1 trillion company one day, does it really matter if I buy at $1,000 a share or $900? No. I mean, look at Amazon. It is today a $1.5 trillion company, and it is still growing at a rate that is beating the market. And really, there are not a lot of YouTubers that will tell you that this is the key to investing success, but I can think of one prominent YouTuber off the top of my head who does talk like this. But that's it. And in case you are wondering, it's Chicken Genius Singapore. And he doesn't talk about Shopify specifically, but he is very bullish on Tesla stock. And he basically ignores the price of Tesla, and he just continues to dollar cost average in with a high percentage of his money. And again, he also ignores the haters. And really, this is the best way I have personally found to get the highest rate of return with the lowest amount of risk. Also, the Chicken Genius guy is pretty funny, so I'll link his channel below if you want to go check him out. Or, if you want to check out his content, not him specifically per se. Although, he's not a bad looking guy in my opinion, but I think you get what I'm trying to say here. Go ahead and click a video on the screen if you did enjoy this video. Also, drop a comment below and let me know what you thought about this video. Thanks so much for watching, guys, and I'll see you in the next one.